Now, you're probably aware of this chart by now. And in this video, I'll explain what exactly happened here, why it matters, and I'm gonna give you a much safer strategy that actually follows the same principle and uses one of my favorite services out there. At the end of this video, the link to this service will magically, just like that, appear in the description. You ready? Let's begin. Now, there are certain groups of people, let's call them the 1%, that have the power of basically making an arrangement to buy or sell a certain stock to hike up the price, or in turn, push it down, even though there is no fundamental substance to back this move, other than some kind of personal behind-the-scenes interests. This is obviously very good for the people who are actually pushing this narrative, not so much for the average retail trader, who, you know, makes his nice cup of coffee, sits down, does his analysis, and believes the prediction will be accurate. But you know what the worst part of this is? Basically, one of the fundamental laws of trading gets broken. So almost everything that you think you've learned about the markets or trading or different strategies gets thrown right out the window. And this law is called supply and demand. Let's break out the old marker. Buyers demand the stock and sellers supply the stock. When there is an equal amount of buyers and sellers, the price is moving in a range, also called ranging or consolidating. This is the range. But when there's an imbalance of buyers and sellers, the price is trending either up or down. In this case, we're talking about the artificial imbalance of more buyers than there are sellers. So we have this huge demand in the price of the stock, but not a lot of reasons behind the supply. So the price moves higher at almost unfathomable levels. And if you haven't picked it up already, I'm talking about GameStop. Now, basically what happened is these degenerates, aka Wall Street bets on Reddit, and that's not my idea, that's what they call themselves, spotted that these 1%ers, the big investment banks, the hedge funds at the top, were heavily shorting the stock of GameStop. And no wonder. GameStop's business model is still, it's in the 1990s. The company has almost nothing going for it, especially during the lockdown, and it's a money-losing machine. Anyways, the community all got together, all 2 or more million of them, and basically said, let's stick it to the man and buy the stock instead. And I kid you not, it worked. And it created a short squeeze on GameStop. Now, a short squeeze is when the price of a stock jumps much higher and those who had open sell positions have to buy back the stock in order to stop their losses and close the position. Because remember, when you close a sell position, you have to buy to close. So this creates an even greater imbalance of buyers and sellers and sends the stock even higher. In the case of GameStop, it went over 2,100% higher. Just look at the trading volume before this happened. Trading volume is basically how many times the stock was traded in the market hours. So we can see here 5 million, 10 million, 4 million, pretty mediocre. And then boom, 144 million, 197 million, 178 million. In short, ridiculous numbers. Now, yesterday, these guys did the same to AMC. And if we look at the volume here, 26 million, 41 million, 49 million, very similar. Now, then 256 million, Jesus Christ, 268 million, 456 million, 1,253 million. Look at the jump in volume for absolutely no fundamental reason other than crazy Redditors willing to bet things like their student loans, their mortgage, to pump up the stock. And it's not stopping with these 2 companies. Look here, all these companies are being pumped at the moment. It's basically the old pump and dump strategy.
We got plans up here that's gonna take this company into the fucking stratosphere!
Anyone with a large enough audience has the power to create these big swings in the price. I, for one, believe this is what Ross Cameron is doing from Warrior Trading. He pumps up the small market cap stocks, and in my previous video, some of the commenters also said the same thing. And he basically pumps up these stocks and sells them at the right moment. This is why so many of his students can't replicate those insane results of his, like 225,000 days. And I think other YouTube traders are doing this as well. But for that, you will have to wait for the part 2 of my previous video. It's coming soon, guys. Don't worry. COVID stopped me in the tracks a little bit, but don't worry. Now, back to my point. Melvin Capital is a big hedge fund who held a lot of short positions on GameStop. It lost around 30% of its value in the first 3 weeks of January. Can you believe that? Average Joes on Reddit collectively made a big Wall Street hedge fund lose so much money that they had to seek a 2.75 billion care package financial support from other big hedge funds. And I know, yeah, most of us don't really care about the big guys. I mean, what, they still have $10 billion in holding, right? What do they care? But you know what? What these Reddit traders are doing, I believe it's good spirit in my opinion. Listen, these hedge funds, they only have one goal, making money. They don't care about GameStop. They don't care about AMC or Nokia. First of all, they're insiders. They always get the data first, so they can always get the first-hand information, behind the scenes information about the trading activity, what kind of positions are taken. They will always have the advantage over the retail trader. And the hedge funds, they have no problem putting a company under by shorting its shares on a massive scale. A company that for all practical purposes is trying to keep its head above water and itself out of the muck. There is no compassion or emotion here, just pure greed and money making. So I'm not mad at Wall Street bets in the least. But hear me out. Everybody's taking a huge risk here. Unless the SEC comes up with some new laws or regulations against such mass scale behavior, and this will obviously take time, nothing is stopping these pumpers from jumping company to company, buying and holding in order to make huge gains. And remember, all of us, that's me, that's you, all of us have a limited buying capital as retail traders. And now, as we spread more and more of our buying capital around, eventually what will happen is some people will cash out their gains and the balance between the supply and demand will even out, sending these stocks back to where they came from. And this is actually happening as we speak. Now, smart buyers will time this by jumping to the next one and the next one and the next one of these hot trending stocks. On the other hand, smart short sellers will be able to time this and make the gains by selling as the hype fades out. And the worst part of it, the last people to jump into this and basically arrive to the party 5 minutes late are beginner retail traders. No offense, that's you guys. People who read about it somewhere want to take a piece of the pie, but unfortunately the pie has already gone cold. Now, for instance, brokers are already experiencing downtimes and straight up making these hot pump and dump stocks unavailable to buyers. I mean, Robinhood's rating went from 4.5 to 1.1 in about 45 minutes. That's because they didn't allow to buy AMC or buy the GameStop. Very straightforward. Now, what does this tell us? There's already some sort of market manipulation going on behind closed doors because, you know, it's a lot of money at stake here. And the big guys, well, let me tell you, the big guys, they don't like losing money. The thing is, at the end of the day, whether it's Melvin Capital or your next door neighbor, money will be made and money will be lost. The stock will certainly fall back down because this bull run is not based in any fundamental value or rational judgment. It's simply not sustainable. And before I tell you what strategy will work with 1,000 times less risk, I'll tell you this. If you want to take part in this craziness, this is what you should do. Make sure you have enough time to sit in front of the screen at least 16 hours a day. So 8 hours studying what is happening in the pre-market activity in terms of the expected volume, the amount of buy and sell positions, and of course what the regulators are saying, what the trading platforms are doing, and then another 8 hours watching the chart, following it super closely, what is going on. Because let me tell you, in these market conditions, in these crazy volatile market conditions, the stop loss might not work at all. The prices are making too big of a jump for the stop loss to execute. So you're risking massive amounts of slippage at the moment. This is why if you want to do this, I'm telling you, take a vacation, lock yourself inside your house and bury yourself into the screen. Maybe then you can get in and get out fast enough to make some serious profits. And remember, this is not investment advice or financial advice. This is just what I'm doing at the moment. And I mean, look at these blue rings under my eyes. It's not fun, guys. It's not fun in the least, but hopefully I can make some money. Now, the biggest lesson we can learn here is that there is loads of unrealized potential and power in the retail trading community. The key word here is community, because the community is the reason behind these crazy bull runs for cheap companies, but not only cheap companies. For example, Tesla is a company with an average fundamentals, but lots of potential for growth. And even bigger than the potential for growth is Tesla's community. The community believes in Tesla and its eccentric leader. Even though Tesla has missed their earnings expectations more than once, they actually missed them today. And people tend to forget that Tesla is not the only electric vehicle manufacturer. In fact, it lost its market share to Volkswagen in the biggest electric vehicle market in the world, Norway, where 54% of cars sold these days are electric. Audi, which is owned by Volkswagen, outsold Tesla in Norway by a lot. So Norwegians bought 9,228 Audis compared to 7,770 Teslas. Still, Tesla traded around 430% higher than Volkswagen, $159 compared to $840. And we're talking about an established car company in Volkswagen compared to a relatively new kid on the block. The community is what propelled Tesla to be the most valuable car company in the world and made Elon the richest man in the world. Not the fundamentals, not the numbers, the community. And the community also has the amazing chance of supporting a company that cares for the future by buying its shares and raising its market cap. This is what's going on. Now, everything that I just said leads me to believe that this year, 2021, will be absolutely game-changing for the retail trading community. That means forums, social trading brokers, you already know which is the best one, link below. Basically, anywhere where there's a lot of retail traders sharing their opinion, these will be the hotbeds for jumping in community-based bull runs. And with communities in mind, I'm giving you the hot sauce right now. Instead of following the herd mentality on Reddit by pumping and dumping useless stocks, I'll explain how you can use exactly the same principles by using a reputable stock picking service. Sounds fair enough? Good. If you're from the US or Canada, I'm 80% sure that you already heard of this service before. That's huge. I mean, that's already massive amounts of trust flow if you heard of it before. But if you're not aware, and before I continue, Jesus Christ, this is what we call pandemic hair. When the hairdressers are not available, everything is locked down. Sorry. Now, before I continue, I want to say I'm not affiliated with the service in any way. In fact, I won't even name it. The service I'm using, let's just call it X, finds undervalued companies from all walks of life. Big ones, small ones, medium-sized ones, with all of the fundamentals in check for future growth. And in my experience, their picks rarely go wrong. And I would have made a lot more money than I have if I wasn't such a pussy for risk. I don't like the risk as much, even when all the data says I should. Sorry, that's just me. Now, the service has both free and premium versions. The premium obviously gets the stock picks first. And I've spotted that the first wave of demand, aka the buying, aka the price going up, comes right after the premium users get their picks. And the second wave of demand is right after the free user base gets their pick. So it allows you to get the first-hand access to the upcoming trends and bullish moves before the majority of traders can jump in with their positions. From my experience, it's important to get into these trades as soon as they recommend them, because the price, 7 times out of 10, will move up accordingly. And this is in large part thanks to the community who executes the trades based on the recommendation. Let me put this on paper so you understand better. The community, as far as I know, the community of this service, as far as I know, is around 600,000 people. Now, most of them rational, logical people with substantial buying capital. Let's just say that 1/6 of them makes a trade with $100. So that would be 100,000 times $100. What do we get? That's already 10 million pumped into the stock. See, 10 million. And of course, that's not a lot. That's not a lot for a company such as Apple, which is a big company. But what about some of the underdogs? This kind of amount pumped into the stock and the volume, that's a meaningful amount. Well, such underdog companies are the cornerstone of these services picks. And the more users they gain, the more substantial the possible market moves that will come from these picks. Again, the picks they provide are based on data, not just hype from some Reddit. I think the best bet for you is to obviously go with the premium version if you can. It only costs like $199 a year for the basic stock advisor. And I believe this is the best investment you can make when it comes to any kind of trading education or stock picks or signals or anything like that. This is the best thing you can get. And obviously, if you can't afford it, stick to the free version. it will still be worthwhile. Next up, you obviously have to think about the strategy that you're going to use. Whether you want to buy the stocks right away as they come out, hold them for a few days, make small 2 to 5% gain as the initial wave of demand pushes the stock higher, or hold out for the big gains long term. The long term is obviously where it's at, where the serious money is at, but it's your choice in the end. Personally, I stick to long term, and even the service recommends this. Hold the positions for a minimum of 2 to 5 years based on their fundamental research. Now, if you're not convinced, a similar thing happens when a big, reputable analyst ups their price targets for a company. Let's check out FinViz. Now, since we talked about Tesla, JMP Securities downgraded Tesla stock actually today from outperform to market perform, meaning that it will likely perform similarly to the overall market instead of shooting way higher as we're used to. And let's look at the Tesla stock, down 3.3%. Now, obviously, Tesla missing earnings also played its part, but yeah, the same principle applies. A source makes the move, the community reacts. In the case of Wall Street Bets, Melvin Capital was the source, the Wall Street Bets community reacted and took the opposite trade. In the case of the service that I'm using, the service puts out their picks, the community reacts, and the stock goes up. Not only because of the community reacting, but it's certainly helping. Now, in this case, the analysts upped or downgraded the stock, and the stock reacted. What do we learn from this? Choose where you get your information. I believe that using these reputable stock picks from a company that's been around for 27 years and actually outperformed the S&P 500 by about 474%, I believe you can't go wrong with this strategy. The principle is the same with what happened with Wall Street Bets, but this is much safer, much more stable, and actually has a track record to prove it, both long-term and short-term. And it's actually worked for me. Obviously, keep in mind that we have been in the bull market for the last 10 years, so nobody can truly know what will happen next. But in general, when you have such high returns and such positive feedback from the community, you just have to accept that this thing is for real and there's no snake oil involved. I think that the picks from this service are your best bet to profit from these kind of community-based moves. And by the way, that link magically appearing in the description, that was a joke, guys. I will certainly put it somewhere in there, but I really wanted you to understand the principle behind of what I'm saying, so you don't just buy or sell something based on what I'm saying. Remember, source, community, execution. Got it? I think you did. Expand your potential, think more than the average retail trader, like, subscribe, unleash the comment section with your opinions, and stay curious. Finance Illustrated, I'm out. But wait, one last thing. I heard your requests, I read all of your comments. Part 2 of our stock trading gurus research, analysis, investigation is coming very, very soon. Stay tuned. Make sure to enable the notifications so you don't miss the video. Anyways, stay tuned. Bye-bye.